Good afternoon. This is Chris Brecher with the Chart Patterns Mastery Division of Simpler Trading with a free video for October 3rd, 2023. Yeah, bond market's still getting torched in here. Look at that right there. We do charts, patterns for, they're called box charts for my subscribers on Sunday night, Tuesday night, and Wednesday night. And we pretty much called this, but now you have this real panic sell-off. And I got to tell you right now, it's time probably to start trading buying the bonds just because of all this, just for no reason, it getting just destroyed. And also the bonds being this far from their moving averages. That's really far. Usually when it's that far away, it has a rally. Maybe it's not the rally, but it's a rally. So just keep that in mind. But I wanted to get back to objectives of the broad market. So when you look at a weekly chart of the bond market or a monthly, and this is the 30-year bond, it's back to where it was, holy cow, all the way back here. So 2007. So that doesn't mean S&P is going to 2007, but it does mean that there's a lot of alternatives to stocks. So the other thing, this is more dangerous to me. Here's the bond market in the last year. So you had this, and I'll show you on a weekly. So you had the bond market start to pick up the selling in earnest right in here. Right there. And you had the ES or the SPX, either. And you had that pick up selling in earnest right in here. Right there. Then you had the bond market have a rally. And you had the S&P have a rally. Except the difference. The bond market is now undercut October 14th to October 24th in this area. Right here. While the S&P or the NDX is way up here in relation to where it was. That's in this area. In this area in 2022, right there, about 3,600. So the bond market that had caused the equity markets to go down last year is now lower than it was last year in October, but the S&P is a lot higher, 600 points higher. Now that's one side of the story. Here's the other couple of sides. Number one, daily chart. If that's a head and shoulders top, but with bonds down like this, that it's more likely to be one. So a head and shoulders measures from the neckline, the previous move high, which is 254 points, and then from there. So that gets you in this area. It's not perfect, but it gets you near that area. Now, how about the NDX? And the NDX one measures to this support area. It's a zone, support zone in that area. So it's almost there. I mean, these things are almost there. Just keep it in mind of the initial sell-off, the initial one. Now, the problem is it's an art, not a science. Do you draw this here? Do you draw it here? So there are differing ways to look at this. There's no doubt about it. But this is what I wanted to show you ultra short term. So the S&P, ultra short term. And I'll take this really with think or swim. You're going to see the SPX. The first objective I had was this area. Right in this area. So right in here. So let me take it with think or swim. I use Schwab instead because I already have this drawn in. There. This is like a rectangle on the right. And it already did the first objective of the rectangle. If you put this on a 15, it's a lot easier to see. There you go. So what you got in here was a little rectangle. And you went down by that amount down to almost support. Almost support. But I'll tell you right now, it's close enough that you don't short in the hole, which means you don't short tomorrow just to blindly short and get caught up with it because you're already at support. Doesn't mean you have to buy if the bond market doesn't rally, but you certainly don't short at support. We played the last 5 minutes of one way. It didn't work, but it was a gallant effort. But really, that support at 42.20 did hold on the right. Did hold. Now, on the other hand, where's the support on the NDX? So the support on the NDX, and you'll see it in there, is the support is some right here, some right there. And it's close, but in the grand scheme of things, it's not even close to support. So just keep that in mind. That's what we're going to be watching tomorrow, is those support and resistance levels. But I think the two big things to watch are going to be the bond market, the 30-year bond, and the utilities, to see if they can keep staying up today. They plummeted yesterday. They actually closed on their high today, and maybe that'll help sentiment with the rest of the equity markets temporarily. But you need to see a big bond rally here for me to get bullish on the ES. Usually you get a big bond rally, you get this to have another leg down, and then it creates positive divergence between the two. You haven't gotten that yet. So take care. Have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.